All right, we do now have the I'm going to place a short here in crude oil. It's on this down close, the action line starts to slope down again, and we are starting to try to break lower. Or I mean, it demanded that the market break one tick below the prior pivot low. The euro is going lower. Okay, so this short is actually generated from this sell signal way up back here, and I do have a trailing stop working, and I don't really want to, so I'm moving that back and using the robust stop management. So I do have a trailing stop function pushed in here that I don't really want to have in place. So I'm willing to average into this trade. The euro continues not quickly in any fashion, but continues to try to move a little lower at this point. We'll see if we're going to get a little bit deeper pullback. So one negative about this trade is that we've come down and tested the 50 XMA, and the 50 XMA is holding. Okay, so that's not great, meaning that's a decent support area. So we'll see what happens here. The NASDAQ's trying to push a little higher. That's not ideal. The euro's really not doing much of anything. The one thing we really want to keep our eye on and just understand and recognize is we're not expecting very high quality market conditions here, guys, because of waiting on the FOMC announcement. Okay, so that is a very real truth. So what I'm doing from a stop perspective here is watching the fast pulse. You know, we also have upside divergence here in both our OS and our fast pulse. So not ideal. The slow pulse is still kind of telling us, at least at this point, everything's going to be okay. But the fast pulse is saying, you know, this might want to go a little bit higher in the near term. So we'll see what happens here. Again, this is a trade that would have been avoided had one had the rule in their trading plan that they were going to demand that they're only going to short when the action line is below the 50 XMA and only going to go long when the action line is above. That's how we traded yesterday, and it generated fewer signals, of course, but we were very successful, 100% winners. So we're being a little bit more risky today. Let me stop talking and focus on my execution here. I'm making a decision whether I want to stay with this trade. I have the opportunity now to get out break even if I want to. So I'm keeping an eye on what's happening here. There's no harm in getting out break even or minus one tick in a situation like this where you're taking some heat. I would have liked it more if that green bar there had caused the action line to, or the pulse line to move down. It just went, nah, it actually still traded up. So I am going to go ahead and bail out of this trade, essentially break even. Okay, minus one tick, guys, on average. And the reason I did, we could easily see this market still go down, but if this current bar closes up, it's going to close up blue, and that's not ideal. Number two is we have the 50 XMA acting as support here. Number three is, and this was the main one for me, and it doesn't mean this market can't go lower. It absolutely can. But you see how we have a down close bar, and what did the action line do, or the pulse line do? The pulse line closed up. Okay, so that's just a minor indication along with the minor upside divergence we have here. We're early. Is this the first trade I've executed live? I think it is. So I'm up. I'm doing well as far as my personal trading that I did in the pre-market. But as far as us trading together, that's our first trade. So I'm erring on the side of caution as opposed to being a little bit more aggressive and letting things roll. So those are the reasons why I made a decision to exit, basically break even, small loss on the trade. But since we did average in, we were able to come out of that basically break even.